Okay, so I'm going to introduce to you Scott Smedresman. He's going to talk about trends in crypto, where the market stands, and which companies are being funded.
So thank you, Clara, and thank you to our panelists. My name is Scott Smedresman. I'm the co-chair of the Global Technology Group here at Brown Rudnick. In that capacity, I have the privilege to work with a variety of investors throughout the venture capital ecosystem in all kinds of different verticals, many of them included in blockchain, and representing founders as well. We represent funds as small as $5 million nano funds up to multi-billion-dollar mega funds and everything in between, and startups, whether you're in the blockchain ecosystem or in the general VC marketplace, from as small as formation stage up through ultra maturity, IPO, and M&A. In that capacity, I'm pleased to host a discussion today around deal making in the blockchain space, specifically relative to a venture capital style investment, raising capital from LPs, and potentially some opportunities for liquidity events for these companies. Here on the panel today, we have Marty Bent, a managing partner of 1031. We've got Toby Lewis, the Chief Executive Officer of Novum Insights, as well as a founder himself in the blockchain space. We have Serge Kassardjian, of Six Man Ventures, and my esteemed partner, Neil Foster. And perhaps I'll just ask each of you to briefly introduce yourselves a little further, share a bit about your firm, what you're doing, and maybe mention a deal or two that you've seen in the recent market that's particularly exciting to you.
Hey, Marty Bent, managing partner at 1031. I think we're unique in this room at 1031 where we're solely focused on Bitcoin. We go an inch wide and a mile deep on Bitcoin. We've raised and deployed 2 funds over the last 5 years and allocated over 125 million from our funds and some co-investments that we did. Top of mind, because I sit on the board of this company in the mining space that's currently going through a merger. I think what we're going to see in the mining industry over the next couple of years will probably be the hottest sector within Bitcoin, where you see M&A happening as miners realize that they can't depend solely on plugging ASICs in and making revenue from mining. They need to diversify their revenue stream. So I can talk about that later.
Fantastic. Toby.
Yeah. So I'm Toby from Novum Insights. We're a data business that looks at all forms of trends on investing and trading data linked to blockchain and crypto. I guess from a standpoint, I actually also co-founded a business in the Bitcoin ordinal space that's been growing quite nicely called OrdinalsBot. So it's one of the major, was the first tool to inscribe onto Bitcoin and allowed anyone to easily inscribe onto Bitcoin. We created, among other things, 7 of the 10 largest files ever put onto Bitcoin, working quite closely with Mara on the Bitcoin side, but going to be diving in, sort of wearing my Novum hat in a lot of just all VC and M&A data that we've been seeing, and it's getting pretty interesting again.
Fantastic. Serge.
Right. I'm Serge Kassardjian. I'm co-founder and managing partner of Six Man Ventures. Also a serial entrepreneur, founded multiple companies, still run multiple companies, run a company. Also helped start, I worked at Google for 8 years, helped start Google's App Store, Google Play, helped bring a lot of the early crypto applications at the time. We were much more friendly than our counterparts at Apple. And Six Man Ventures is we have 2 funds. The last fund size was $140 million. We do pre-seed and seed early stage venture investing. So, the roots of our fund are we've been founders, we've built, we've grown, we've gone through all the ups and downs of starting companies, but we're also crypto native, use the products and the protocols and, just love them deeply. And so we'll do anything, our typical check size can range from $1 to $6 million, where we will lead rounds at the earliest stages when it's 2 people in a deck, to maybe to the seed stage, but we don't typically go like later stage investing. So, yeah.
Pleasure. Neil.
And I'm Neil Foster. I'm co-chair of our technology sector practice across our firm. We're a firm that's UK and US, and so I bring the English accent. But I've been working at American law firms since the 90s, just in technology. And you asked what's exciting me. Well, I've been working on crypto and blockchain deals since 16, 17, and I've been predicting since then that there's going to be a spike in M&A at some point, and we haven't seen it yet. And I was talking to Toby about the statistics that he publishes on that. And so what excites me is there's going to be some large M&A at some point, because as well as doing venture capital deals, obviously we stick around until the exits. But a lot of the exits that I've been working on through the crypto winter and after the crypto winter are distressed merger deals that don't get announced. So I'm very much looking forward to doing the traditional technology, venture, growth, buy and build, and international exits at hundreds of millions and billions, but we haven't yet been doing those. We haven't seen those in the market. That's what I've been predicting since 2017, and I hope it's going to be soon.
Yeah, excellent. So we spend a lot of time in our practice thinking about what is the state of the overall VC market, and it's not a surprise probably to many in this room that overall VC-style investment has gone down quite a bit in deal volume. In the last year to year and a half, we've seen across the board, sectoral-wide, whether it's pre-seed, seed A, and into growth, probably an aggregate of about a 60% reduction in the number of deals that are happening across the sector, at least on the United States side of things. So that's obviously quite a dramatic decline from some of the peaks of the during the pandemic investment style, when there was a lot of capital flowing into the market. Valuations went up dramatically, obviously mirroring what we saw in the public markets. Those things have all come down dramatically in the number of deals. Interestingly enough, if you look a little bit under the hood at some of the data by seed, pre-seed A and beyond, by stage, we actually see valuations drop dramatically at the growth stage. But valuations have stayed steady, or in fact have gone up a touch at the pre-seed, seed, and even A stage. That's paired with a dramatic reduction in the number of deals. And the common sense interpretation of that from most practitioners is that we're seeing a rush to quality, right? We have far fewer deals being done, more capital chasing those far fewer deals. So the result is that the valuations don't go down as dramatically, or in fact, at some stages are going up. Now, Toby, I want to ask you to maybe share some of the data that you at Novum have been able to collect, specifically in the last year to year and a half on the crypto ecosystem. Are we seeing those macro trends that we're seeing across the VC ecosystem overall mirrored in crypto, or are we seeing a different story?
Yeah, and I think sort of crypto and blockchain has really been its own little ecosystem in forever, and in this current bounce back. Interestingly, I guess, and every attendee will be shared these charts, but I'm going to sort of set the picture of Q1 of this year. It was roughly on a par with 2020, which is pretty good because obviously sort of there was definitely a poor year in 2023 for crypto and blockchain venture capital investing, and the best year has been, and so sort of about 90 billion was invested, which is roughly 2020 levels, and I guess before FTX, before Celsius, before many of these very high-profile collapses and I guess pullbacks from like the enterprise blockchain side and these kind of things. And I think what anecdotally I definitely feel is there's a lot of investment. People are feeling that they want to deploy, and if you're sort of people on the founder side are probably finding it's one of the easiest environments to raise in since those 2021, 2022 days in crypto and blockchain. But interestingly, it's a market where still North America is dominant, which is interesting because obviously we've had a lot of conversations from the lawyers and the regulators today about some challenges in the US regulatory environment for running blockchain and crypto startups. But I think what's been pretty interesting is about 200 billion was deployed in startups in North America. The Asian market, and this is where I think probably really differentiated from the sort of the wider venture capital and technology market, was at 150. I think it would still clearly, like if you look at the overall macro picture, the US is more dominant in traditional venture capital, but in this particular area, there's obviously like Asian tech investors are able to move very fast and able to do certain things, and so I think that's a trend that obviously I think will be interesting to watch and how it plays out. And then in terms of M&A in the and Neil and I have often talked about this, that sort of you should expect some form of consolidation. There's been all this kind of investment into startups across crypto and blockchain. Much of that equity takes a long time to get to a point where it's acquirable, and as Neil says, behind closed doors, there's a lot of deals being done by the lawyers at Brown Rudnick and elsewhere. So it's certainly been interesting, and the levels for M&A have been picking up a bit, but still it's a bit slower than the venture capital side. And yeah, just in general, I think people are beginning to get quite optimistic about where things go. The chart that's obviously very interesting, and you'll see it there, valuations have come back up to even the levels of like the peak of 2021. So in Q4 of this year, we were seeing median VC valuations in crypto and blockchain go up to 3.5 million. They were 2 million in Q1 of 2023. And in terms of the and so that's a pretty interesting trend, that the deal sizes are creeping back up. The valuations are not creeping back up so much. So back in the day, sort of median pre-money valuations in Q3 2022 peaked at 4.5 million. They're still at 3 million, but pretty healthy, both in terms of like the valuation of startups that are getting backed, and I should add that data is probably skewed quite a lot, because the effectively pre-money valuations, they're not always put into the public domain so much. So it's probably a thinner data set. And it's interesting in the data to see that sort of there's a lot of new participants that are taking over things. I guess the big trend, we've got the halving coming up, like clearly Bitcoin and other cryptos have been on a massive tear, and like it's probably like just the wider trading data of recent times means that we've been going into a much more sort of strong overall transaction market. So and I think we'll obviously be sharing this report in significant depth, and have let Brown Rudnick give it to every participant here. So we're excited to see that happen. In terms of the largest deals, you've seen the likes of the sort of HashKey and Solaris and others. So a lot of investing and trading infrastructure deals get done, and blockchain protocols in the last quarter. And in general, we'll be sharing more of that information to you. But it goes into a breakdown of a lot of the largest investors during the last 3 years, 4 years, and who's been coming up and what they've been doing.
No, it's fascinating, and understanding where the market actually is something that's very challenging to do, because we have a vibe, perhaps, for the market based on some high-profile deals that we see, but under the hood, it actually can be very challenging to understand whether that's just anecdotal or actually signal in the market. For example, JP Morgan put out a report, I think only last week, indicating that deal activity on an aggregate investment level into U.S. blockchain or other crypto platform companies was about flat or even down from last year, which is a little bit against the sort of the conventionalism you sometimes hear in market today, that with the recovery of the price of Bitcoin and other crypto assets, we're seeing more investor interest, which I can tell you is true anecdotally in our practice. Nevertheless, JP Morgan is reporting that actual inflow into the ecosystem is flat or slightly down versus the same time last year. For the investors on the panel, what are you seeing, and which one do you think is the right story, or is it something in between? So maybe, Marty, we'll start with you.
On the LP side of things, particularly the institutions, I think with the carnage in VC more broadly over the last few years, I think they're finding out that they're over-allocated towards private equity and VC, and they're waiting for those portfolio balances to get more in line before deploying back into the space, and on top of that, deciding which GPs they want to invest in. So you have that at play. I do think LP sentiment has certainly shifted with the acceptance of the Bitcoin ETFs and the fact that BlackRock and others are putting their stamp of approval on Bitcoin as an asset. And then generally, in the space that I'm in Bitcoin only, we have seen a lot of great deals over the last couple of years. It was actually a bit counterintuitive, but the blow-ups of BlockFi, Celsius, FTX, 3 Hours Capital, Grayscale were actually massively beneficial to our portfolio companies who focused on doing custody the right way, doing lending collateral the right way, and doing hardware wallets the right way, and a bunch of other things. And so we saw in our portfolio throughout 2022, 2023, a lot of our companies were getting new users as people were waking up to, oh, this is a new type of asset. We need to handle it a particular way. And so that allowed them to weather the bear market pretty well. They had actually user growth over the bear market. And for us, from a deployment perspective, maybe it's lucky, or we like to think we know what we're doing. We raised our last fund in 2021 and deployed over 2022, 2023, when valuations were coming down. And to Toby, your point earlier, that's something that we definitely see internally, is that valuations lag in both directions.
Super interesting. Serge, what are you seeing in the market?
Yeah, we've never been more active. I think in the early stage market, there's better teams, more experienced teams, building, we think, transformational companies. From 2020, 2021, we were very active in 2021. There was a big shift in the market where you saw a lot of the traditional VCs, Sand Hill Road VCs, come into the market and then all leave very, very quickly. Over the course of the crypto native VCs like ourselves stayed, never left, doubled down on places where they had real conviction. For us, we had massive conviction around the Solana ecosystem. And you're starting to see the fruits of that happen right now. We have already, from an LP perspective, we're constantly thinking about DPI and how we return capital to investors. We've already returned back our first fund. entirely plus a lot more. And crypto's such an interesting venture asset class because the biggest issue with venture is it takes forever to return capital. And crypto has both the liquid side of it with tokens and the ability to return DPI to investors, even if it's partial, as well as long-term equity and long-term partnerships with these companies. And so from an LP perspective, from a venture LP perspective, there's no other asset class like the crypto VC asset class in my opinion. So it's been great. And a lot of the tourists are gone. They're all focused on AI or something else, which is great for us. But there's a lot of really interesting, innovative stuff happening right now, from DePIN to a resurgence of NFTs to Bitcoin. You know, we've done quite a few recent investments in and around the Bitcoin ecosystem, to real use cases of games and applications and social applications around Solana, memes, meme coins. I don't know how much that was mentioned today, but this is something very real here, right? Everyone thinks that the next social paradigm is going to look like Facebook or Instagram or Twitter. The reality of the situation is social is completely shifted into speculative conversations around communities. We recently invested in a company called Pump.fun. We first money into it. It enables people to create meme tokens, and the number of little communities that are being sprouted around. And you could make an argument that any restaurant, any sports team, any community, any joke can have some kind of meme token around it, and it can be financial, and that's what social is going to look like in the next 10 years, not people going onto a social network. So there's a lot happening right now. I think it's the best time ever to be investing. We've never been more active.
So let's click on that even a little bit further, the level of activity, because I've seen a lot in the last year or so of a lot of investors being very selective, staying on the sidelines. And you see that in the aggregate overall macro numbers of the number of deals going down, but the valuation staying flat or up, which is the rush to higher quality. Are you seeing an increase in quality, or what's driving that activity?
So I'm happy to take it.
Yeah, I'll ask you first, and then I'll give it to other panelists.
I think you had a couple of really bad black swan events that happened from 21 to 23. Obviously, COVID, like no one knew what was going on during COVID. FTX, all the massive failures. Putting a lot of that in the rear view and getting further away from that has helped tremendously, because the people with deep conviction stuck around, and now they're starting to build things that people love and use. I think DePIN's a really, really good example. DePIN infrastructure was around, pre-FTX, obviously, and now you're starting to see lots of interesting DePIN projects that are very strong use cases of, decentralizing, whether it's compute, whether, all sorts of different use cases that should exist. So I think just distancing yourself from the bad actors, a little bit more stability, both from like a world perspective, and the people in the ecosystems are getting more mature. They're becoming better entrepreneurs. They have a degen element to them, but they also have experience to them. So it's sort of really, really interesting. Bitcoin's now, 5 years ago, it was a bunch of Bitcoin maxis around everything, but now the Bitcoin community's evolved into some really interesting things around BitVN and some of these layer 2s. So it's just the whole industry is maturing.
What do you think at 1031? Are you seeing that same kind of conviction for this market, or are you, like many of the investors I've heard over the last year, being hyper selective and a little bit tighter with your investment velocity?
We're definitely a lot more selective. I think what's happening on L2s on Bitcoin is a continuation of the speculative fervor we've seen in the space over the last decade. What we really like to focus on is the monetary use case of Bitcoin. We think there's an order of operations to the success of Bitcoin in the long term, and we're really still on the front end of that order of operations. So what we like to focus on at 1031 are things like the convergence of the energy sector and the mining industry. We think that is a huge convergence that many people are overlooking, is going to be profound when we look back in a couple decades. Things like custody, exchanges, boring products, like getting Bitcoin onto Bitcoin. We still need to fill out things on the front order of the operations that lead to Bitcoin's success and make it easy for people to use. And so while ordinals and things that have happened on other chains in the past are coming to Bitcoin, we view that, I say this as politely as possible, as noise. We think the monetary use case of Bitcoin is going to be the most valuable and the most pressing need for people around the world. And so we try to focus our efforts and our capital on companies that are really focusing in on that use case.
Awesome. Neil, on the UK side of things, obviously the UK is the second largest market for this type of investment activity and for the companies that are coming up, raising capital and seeking to, take money from investors and raise funds in LPs. Are you seeing similar trends in your practice on the UK side? And with particularity, how have valuations, in your view, changed now that we're out of the last crypto winter and into this new, bull market?
Yeah. So a lot of the trends in the UK and rest of the world are very similar from a technology point of view that we've just been discussing, but there are differences in each of the markets. And the main difference in the UK, like our capital markets, second biggest capital market in the world, but it is 98% institutional. It doesn't really have such an retail element, and that's the same that the lawmakers want with the regulatory changes last October in the UK. The lawmakers have indicated that they want there to be an institutional market. If you're on the consumer market, if you have consumer-related technologies, then it's not to say that that is impossible. It's just that it is more highly regulated, it therefore costs more money, and you are slower to go to the market. So if you already have that consumer established business, the valuations are good. But the deal volume is less. And if you're trying to build that, and especially if you're regulated, and if you're regulated, you need the technology, you need the customers, and you need the regulatory license. And if you haven't got all three of those, when the regulations changed in October, it's been very difficult to raise money on the consumer side. But if you're B2B, wholesale, institutional, then that's different. Then that's the difference between the UK, capital markets, and now this is following. It's much more institutional.
Fantastic. Toby, let's talk a little bit more about valuations. What is the data that you've collected over the last, let's say, 12 months shown on valuations? Have we seen valuations track crypto prices and other digital asset prices? Have we seen a decoupling from those things? Have we seen a reset in valuations, much like we've seen in other venture capital-backed ecosystems?
Yeah, so I think there has been a reset, right? Like I think it's clearly the size of, I think it's very interesting because often the valuations aren't made public, and so it's much more reliable to look at the size of round numbers, which are definitely going up. But I think clearly the data does not show a massive increase in valuations. I think that's because there is still more leverage for capital players. You need to Serge's point, there's a lot of very, very good founders out there who are trained and skilled, and I think we're at the phase in the market really where people want to close deals, move quickly, maybe would rather flex on valuation than on terms, if you know what I mean. But I think obviously we really only had the token market reopen, which is one of the big liquidity events for a lot of the VCs in the last few months. So I think once you get more deals performing well and strongly in the token market and more exits and all these kind of things, then you'll see valuations begin to creep up as but I think we're definitely not there yet. I think we're at that nice phase of the market where the leverage is not really with the founder and it's not really with the investor. So you're getting like, which almost is, it will definitely swing in one direction very quickly. And I think my bet is that it will be capital, right? Because as long as the capital markets, as long as Bitcoin, all of these things stay up, then more and more people will go searching for, like people are already making huge wins on the altcoin and the meme coin plays and all these things that Serge. And as people get more and more confident that actually, if you're being too thoughtful, sitting on the sidelines, you're missing out on 10, 20x opportunities. And that's how it always plays out. And I think one of the great things at the moment is it's been a classic kind of technology market that's been overfunded in a way. So what happens on the other end of that is you get really amazing technologies and really, really great companies after going through a few barren years and having some big blow-ups like we saw a couple of years ago. So I think it's a really exciting time to be in all of crypto and blockchain, and there's going to be some amazing things being developed over the next few years.
Serge, at Sixth Man, you shared that you've never been more active. You're doing a lot of deals. That's a really exciting time to be an investor. Do you share Toby's view that it's a more founder-driven market, or do you think that investors have more leverage in this market? Yeah, go ahead.
It's starting to shift. I think 6 months ago it was investor, and you're starting to see it being more founder driven. Part of it is there's liquidity happening with token events, right? You're seeing people are starting to make money again on tokens that are coming into the market. With that, the founders start to have more and more leverage. And most of the people who are kind of in a similar type of firm that we are, a big chunk of their portfolios are planning for token events in 2024 and 2025. And we're going to be seeing lots and lots of them. The question is, how sustainable are they? Who the projects are, what the people are, there's so many variables to it, but I think you're starting to see the beginning of a bunch of massive token events that are going to be happening over the course of the next, I'd say, 6 to 18 months.
What do you think about that, Marty? How are you viewing the founder versus VC power dynamic in the current market?
Well, I think for us specifically, it's a bit unique because despite the fact that Bitcoin is the most massive asset in this space, $1.25 trillion, the amount of venture capital that's been dedicated to the Bitcoin ecosystem specifically is orders of magnitude smaller than broader crypto. And so that allows us to be a small fish swimming in a big pond where there's not a lot of capital chasing after these Bitcoin-only deals, which actually gives us a good advantage on the valuation side. Everybody's distracted with crypto and the next big meme coin or hype cycle. And the companies we're investing in, the founders are solely focused on Bitcoin. They're looking for capital partners that aren't going to push them to launch tokens or get involved with the speculative fervor around tokenomics and really allow them to build a solid business with Bitcoin at the foundation. And since there's not a lot of capital allocators focused on this thesis, which is contrarian in the space, which is insane to me considering how prominent Bitcoin is in the space, it gives us a good advantage, which we like that there's this speculative fervor going on and a bunch of firms are raising a ton of capital to throw at all these token projects because it allows us to really find what we believe are going to be generational businesses building on top of Bitcoin. They're going to be around for the next 30, 50, 100 years, some of them. We have very strong conviction in that, while others are focused on these token projects that tend to have the speculative fervor and then fizzle out.
So as maybe a more traditional long investor, how are you thinking about valuation in today's market, and how is that valuation maybe reset, in the current economic environment?
Like I said earlier, it's lagging. So the price has obviously gone up significantly over the last 14 months, but the valuations that we're seeing are still very attractive.
Mm-hmm. And Serge, how about you? It sounds like you folks may be doing direct token deals in addition to equity deals.
No, we do equity deals, and
just equity.
And we get a token warrant with the equity. And look, some are speculative, some are not, right? At the end of the day, your LPs want you to put money back in their pockets. And we do that at a very fast velocity, and our returns speak for themselves as a fund. We're in projects like Magic Eden, which is, makes a lot of money on the revenue side. And, there's going to be a lot of other opportunities like that. It's just different parts of the ecosystem and different ways that people interact with the ecosystem. From a valuation perspective, we're still seeing a lot of great deals at reasonable valuations. It's not where it was in 2021 and 2022 by any means. If something has AI thrown on it, then the valuation is like crazy, but we try to avoid that.
Do you pass on those deals, or are they still interesting to you?
We pass on them, yeah.
You pass on them.
Yeah. We've done some, we did a deal which was decentralized compute for AI applications. It was a deepen deal. That makes sense in the model of crypto and the things that we look at.
What are you thinking, Neil?
So what a lot of my clients on the later stage will see on the valuation side is those late stage deals, in the absence of large M&A, those late stage deals set the valuations, especially on an aggregated basis. And one of the key things in Toby's research that we're going to circulate is at the back of that there are the co-investment deals. Who's investing with whom? And now with each passing year, especially going through the crypto winter and difficult times, and now coming back into hopefully more sunny times, hopefully. And those co-investment deals, there's now more experience of co-investing on those $100 million venture deals, and that experience and that trend will suck through higher valuations, hopefully, and then eventually lead to the large exits. But in the meantime, that appears to be what's setting the valuations. Is that what came out of your research, Toby?
Yeah, no, 100%. And I think the co-invested data is really, really interesting. I couldn't quite articulate it because it's kind of a lot of trend pattern spotting. But I think what you can, what is intuitively obvious is by looking at how people who've co-invested well and done multiple deals together, it's very clear in the VC world, like certain people like picking up the phone to other people more often, or have similar kind of criteria and similar ways of looking at a deal, right? So it will be like it's really kind of fascinating how much sort of, I don't know, Coinbase and Digital Currency Group or whatever invest together. So that's the kind of data that it looks at in terms of certain of top tier VCs will index towards other ones more often. And I think there's been a lot of trust and distrust sometimes build up by those kind of deals, right?
Fantastic. We only have another minute here, so I'm going to ask each of us to close, and I'm going to ask to go down the line, maybe starting with you, Marty, to share a contrarian view you have of today's market, but one that you have conviction in.
I think Web 3.0 will materialize on Bitcoin, but it's not going to be via things like ordinals or meme coins. What we're seeing, and we've allocated some capital towards projects working on this version of Web 3.0, is combining open source protocols that have nothing to do with money with open source money in Bitcoin. So an example of this is podcasting 2.0. You can combine RSS feeds with Bitcoin over the Lightning Network. You put a Lightning Network address in your RSS feed and people can send you Bitcoin as they listen to your podcast. This is materializing in VoIP as well. You can integrate Bitcoin into the VoIP layer. New communications protocols like Nostr, they're integrating Bitcoin. So this whole idea of the social web that needs this monetary asset to actually fuel it and monetize it, it's not necessarily creating a new token for each use case. It's really combining Bitcoin with pre-existing open source protocols that have nothing to do with money or tokens. You can just combine the two. And that's how you get the peer-to-peer Web 3.0 monetization.
Awesome. Toby.
Yeah, and I guess I'll take the direct counter to that as a co-founder of OrdinalsBot. So the effectively, I kind of feel there's a very interesting element playing out on Bitcoin as well, where you're having these inscriptions fused onto Satoshis, and rightly or wrongly, they are creating more value. I think my bet is at least in the next month or two, there's going to be a lot of noise around runes. So we've been prepping up and working quite heavily in terms of like how runes will play out and what will happen there. And you've also seen the BRC20s and the fungible tokens on Bitcoin. So we're very close to Domo, the advisor, who's an advisor to Ordinals Bot and was creator of BRC20. So I think there's something very weird and interesting going on top of Bitcoin, and how that plays out, I think, is juicing fees for miners, and there's been it's becoming a very interesting dynamic environment there.
Serge, what are you proud to disagree with people on?
I don't know if this is a disagreement, but this is a contrarian view that probably a lot of people aren't thinking about. I think Apple and Google and the app stores are going to start embracing crypto-related elements.
That'd be awesome.
I think what you're seeing with both Apple and Google and some of the situations that they've been with Epic is their rev share is getting squeezed left and right. And historically, they did 30% for a number of reasons. They've needed to come down to 15% for subscriptions and other things. But they're in need of new ways to monetize. And one clear way to do that is through the application layer that will exist with Web3 and crypto and games and social and all of this, all of the things that are going to happen around it. And so you're going to start seeing, especially if what I think a lot of people probably in this room think is going to happen with the price of Bitcoin and other cryptocurrencies post-halvening, you're going to start to see some of the larger tech companies start embracing crypto and Web3 in a way that they've never done it. And I think it's going to happen first in the two app stores. And I think that's going to have a massive move forward for the adoption of crypto and Web3.
Awesome. I'd be excited to see that. Neil, bring us home.
So I agree with that, and but as well as the tech giants, I think that the institutions, financial institutions, exchanges, and so on, a heavily regulated industry, they, like Internet 1.0, will pile in late and have to overpay on expensive M&A. And we've seen this in every. So I started in '94, so 30 years worth of technology analogs, and so I think that there is going to be M&A, but it'll be existential for the financial institutions to get into this sort of area, and they'll do it late, and they'll have to overpay because they're not playing enough because they're run by compliance officers now.
Completely agree with that.
And lawyers.
Right. Well, thank you to our panelists, and thank you all.